Good morning. Welcome to CADX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, January 8th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 9:30 a.m. in Mexico City. If you need to contact us during the broadcast, you can phone in toll-free at 1-866-67-CADX. Overseas, our AOL Instant Mail address is CADXTV. On this day in 1982, AT&T, the American Telegraph and Telephone Company, settled a lawsuit with the U.S. Department of Justice and agreed to divest itself of the 22 Bell System operating companies. Today's birthday, the British physicist Stephen Hawking is 67 years old today. We're going to report later in the broadcast about a speech that President-elect Obama is giving right now at George Mason University in Virginia about his economic plan. It began about 20 minutes ago. In the early part of his speech, he urged Congress to pass his economic rescue bill quickly, or a bad situation could get dramatically worse. I don't know how much worse it could get without getting back to the 1930s. Now to our main news. In very big insurance and reinsurance news, the FSA has slapped Aon Limited, one of the largest insurance and reinsurance brokers in the UK, with its largest ever financial crime-related fine. The Financial Services Authority has fined Aon Limited £5.25 million because Aon failed to take reasonable care in its anti-bribery and corruption systems in connection with making payments to overseas firms and individuals. According to the FSA, as a result of Aon's weak control environment, the company made suspicious payments amounting to about $7 million U.S. to a number of overseas firms and individuals. The Director of Enforcement at the FSA, Margaret Cole, said this is the largest financial crime-related fine imposed by the FSA to date. It sends a clear message to the UK financial services industry that it is completely unacceptable for companies to conduct business overseas without having in place appropriate anti-bribery and anti-corruption systems and controls. Between January of 2005 and September of 2007, Aon failed to properly assess the risks involved in its dealings with overseas firms and people who helped it win business. Presumably, over that 32-month period, Aon paid out the $7 million in what the FSA termed suspicious payments. Cole went on to say that the involvement of UK financial institutions in corrupt or potentially corrupt practices overseas undermines the integrity of the whole UK financial services sector. Aon Limited, Aon's principal UK subsidiary, fully cooperated with the FSA and it agreed to settle at an early stage in the investigation. As a result, the FSA fine was reduced by 30%. Without the discount, the fine would have been as much as £7.5 million. Aon said that it recognizes and regrets the failings that led the FSA to fine it. The company confirmed that it has agreed to the fine. Aon said that those failings, i.e. the suspicious payments, arose principally out of its aviation and energy sectors in relation to business in certain non-UK high-risk jurisdictions. In a statement, Aon said it, quote, recognizes that certain failings in its systems have occurred in the past, and this has led to a number of potentially inappropriate payments being made to third parties. It went on to say that the FSA has made it clear that Aon's conduct was neither deliberate nor reckless, and that since becoming aware of these issues, Aon and its senior management have been determined to remedy their relevant systems and controls to guard against such problems happening in the future. The Economic Times of India is reporting today that the fraud at Satyam Computer could trigger one of the largest directors and officer insurance claims ever seen in that country. Satyam has a $75 million cover to defend directors who are under fire for dereliction of duty from legal action in both India and abroad. D&O Insurance, of course, covers companies and directors for the cost of defending themselves against legal actions. Although the terms of Satyam's D&O cover are not known, such policies can have the coverage extended to cover payments toward damages, judgments, and settlements. According to insurance officials, the minimum cost of defense in the United States is around $5 to $6 million U.S. The D&O cover acquired by Satyam was purchased from Tata AIG for a primary amount, and beyond that, reinsurers such as New India Assurance and ICICI Lombard General step in. Senior officials at New India and Lombard confirmed their participation at higher levels of the coverage. The managing director of Howden Insurance Brokers said that the Satyam incident would lead independent directors to actually question whether they're covered. Some insurers believe that just as D&O covers become more expensive in the fallout of Enron, some insurers may become nervous about the Indian market. However, the same Howden broker said, "I don't think there would be much of an impact because the pricing on this one is a one-off case and there's enough capacity in the market." According to India officials who are involved in the insurance industry, Tata AIG's presence as a primary reinsurer would be reassuring to Satyam directors since AIG is very strong in these policies. Speaking of AIG has supposedly, reportedly, sent out information memorandums to potential buyers of its American life insurance company, Alico. This, according to two people familiar with the matter. It's being reported by the Insurance Insider. This move, if true, signals that the crippled giant is beginning to embark on larger disposals following the sale last month of its specialty insurer unit, Hartford Steam Boiler Group, to Munich Re. That sale, as you may recall, is being vigorously questioned by Maurice Greenberg, who controls 10% of AIG's stock. The disposal of Hartford Steam was the first sizable divestiture by AIG, as the company is struggling to pay back the $60 billion in loans it's received from the government. Alico could sell for as much as $10.5 billion. It operates in 55 countries, including Japan, where it's the largest of AIG's 3 life insurance businesses. AIG has not yet sent out information packages for the sale of a stake in American Life Assurance, which is another big owned company by AIG in Japan. Catlin, the Lloyd's reinsurer, has announced that Joseph Haran has been appointed Chief Underwriting Officer for its U.S. reinsurance business. In his new position, Haran will be responsible for the reinsurance operations of Catlin U.S., which includes property fac and treaty, marine treaty, brokerage facultative, accident, and health workers' compensation. Also, he's responsible for the Latin American Caribbean underwriting units. He will succeed Andrew Anglesby, who has been appointed Director of Reinsurance, responsible for strengthening Catlin's U.S. customer relationship. Catlin U.S. is headquartered in Atlanta, and it encompasses all of the group's operations based in the United States. This morning, the Bank of England cut their benchmark interest rate to the lowest rate since the central bank was formed in 1694. This as policymakers tried to prevent the credit squeeze from deepening Britain's recession. The bank's Monetary Policy Committee reduced the rate by half a point down to 1.5%. This matched the forecast of most economists. The reduction limits the central bank's scope to keep fighting the recession with its main policy tool. That may spur the bank to cooperate with Prime Minister Gordon Brown to inject money into the economy through so-called quantitative easing. According to one analyst, quote, "They'll come down below 1% by the second quarter. Things have deteriorated further, and this highlights the need for further monetary stimulus." Dow Jones Industrial Average is down about 75 points. The President-elect is still speaking at George Mason University. Now to a word from our sponsors.